Alright everyone, Cowboy Trades here, welcome back to the channel for another update on Bitcoin and the S&P 500. So the focuses of today's video are going to be around the debt ceiling deal, which has just been wrapped up, a new and busy week ahead of us with lots of new economic data coming in, and some significant divergences which are happening in both the Bitcoin and equity markets. And we'll of course top this off with some Bitcoin and S&P 500 analysis. So let's dive right into this. So starting off on the debt ceiling deal, President Biden and the Republicans have finally reached a debt limit deal in principle. Now, this is only in principle, it has to be put through on vote, and this is expected to happen on Wednesday, but don't be surprised if this gets delayed into late next week. Now, the summary of the debt ceiling deal is basically that the debt ceiling can be raised for another 2 years. After 2 years in 2025, there will be no further budget caps, but until then, they plan to cut spending by 50 billion, which is not really too much for the US, that's only 0.2% of GDP, and they're also going to cut back on 10 billion worth of new IRS funding. And until 2025, there will be no new taxes or government programs in place. So yeah, there's still a lot of work to do, and this bill does need to be voted on before it does go through. But it looks like in principle, the US has avoided this default. Now moving on to the busy week worth of economic data ahead, first of all note that on Monday, the stock market will be shut because in Europe they have bank holiday, and in the US they have a Memorial Day. On Tuesday, we have a consumer confidence report, which is expected to drop once again. On Wednesday, we have the US JOLTS job openings, which are expected to rise. And we also have two Fed speakers talking. We have Bowman speaking, and we also have Fed Harker speaking. If either of these Fed members says anything significant, then I'll post it over on my Twitter at 618_cowboy. So be sure to follow me and I'll keep you up to date with Fed commentary. On Thursday, we have US initial jobless claims, which is a leading indicator for the unemployment rate. This is expected to rise. And on Friday, we'll be concluding the May job reports with the unemployment rate and also the non-farm payrolls. Non-farm payrolls are expected to decrease, and the unemployment rate is expected to increase for the first time since March of 2023, up to 3.5%. So a huge week worth of important economic data, especially for the job market. Once again, make sure to follow me over on Twitter where I'll post all of the relevant data. So there we go, now we've got the boring economic data side of things out of the way, let's dive into the technical analysis, which I'm sure is why most of you are here. Now, first of all, let's start off on what is going on with Bitcoin. I want to follow up from my previous video 5 days ago over on the 22nd of May. We warned you that there were two significant changes happening in the Bitcoin charts. Number one, the weekly MACD was looking like it was going to cross bearish next week, and it potentially could cross bearish tomorrow. And of course, we did have the daily EMA ribbons fire bearish. Now, in the last video, we said this. Don't be surprised if, just like we've done in these previous examples, Bitcoin remains a little bit choppy for the next day or so, pumps back up to 27,400, flips it as resistance, and then continues its descent to the downside. And as you can see from our video here on the 22nd, we pumped right back into the daily EMA ribbons and had a major move back down to the downside. So from our last major video, Bitcoin is in imminent danger. We broke down almost 6%. So why are we kind of bouncing back up right now? Well, most of these gains have been happening in the past 24 hours where we've got, news that the debt ceiling agreement has been reached. I find it extremely suspicious though how the S&P 500 rallied on Friday before it closed, 2 days ahead of the debt ceiling agreement. This gives me kind of insider Nancy Pelosi type vibes. But nonetheless, Bitcoin itself has pumped back up in the past 24 hours, once again retesting the daily EMA ribbon. So what has changed from our last video? Well, from a technical perspective, we're pretty much in the same place. I did post over on Twitter when we were down at 26,000 a couple of days ago that the daily and weekly is still bearish. However, on the lower time frames, we were actually seeing the 4-hour RSI start to come down and bottom, and I basically said, until this resets, short scalps are off the table for me. And as you can see, the stochastic RSI reset, we went back to the upside, and we are still making lower highs from this most recent pump. And you are seeing right now the stochastic RSI looking like it's very overextended and potentially gearing up for that next move back down to the downside. In terms of what's happening over on this chart, once again, you're seeing that retest of the daily EMA ribbons from a lower price target. But another way you can look at this, because, to be honest, we've already retested the EMA ribbons as resistance. What we haven't retested though is this 0.5 Fibonacci on this rising Fib channel. If we draw from the lows here, draw from the lows here, and then draw up to this high, we have this beautiful fib channel. And as you can see, we've been thoroughly respecting the 0.5 Fibonacci and the 618 in this fib channel. You can see for the past week or so, while we were kind of breaking down and then finding a level of support, we found it on this 0.5 Fibonacci, held it as support, held it as support, held it as support, and we broke to the downside. Obviously, right here, we retested the daily EMA ribbons, but we only just after the retest broke beneath the floorboard and bounced on the next fib level to the downside, the 382 Fibonacci. So we are currently, as of the time of recording, sitting right underneath this 618 Fibonacci, round about 27,250, retesting this as resistance. In terms of the liquidity swings on the Lux algo, there's really not much trapped liquidity up at higher price targets. Even if you come over to the weekly time frame, you've got 8,000 Bitcoin here, 17,000 Bitcoin here. There's not really much liquidity to the upside. That being said as well, there's not too much liquidity to the downside either. So, for market makers, really, it seems pretty neutral from that perspective. However, once again, following through with the point that I made in my previous video that Bitcoin is in imminent danger, we have now concluded this daily EMA ribbon retest. We're now retesting the 0.5 Fibonacci as resistance. And like I said in the previous video, in about a week's time, we're probably going to see this bearish flip over on the MACD. Now, there's actually an interesting perspective that I've got on this. Potentially, we might be seeing a bounce in the short term. Even though the MACD is going to cross bearish, let's say hypothetically we cross bearish on Monday and we don't really have a solid reaction in the S&P 500 and Bitcoin until Tuesday, because remember, the S&P 500 is closed on Monday, so we're really waiting for the rest of the markets to open on Tuesday. But if we come over to this chart and we identify the major flips on the MACD, I'm looking at the major crosses that happened above the heart line, not the crosses that happened beneath the heart line. So we're really looking at these major overextensions. If we clear up the chart no, I can't do that. If I just get rid of the stock very quickly and we come and look at these data points, what you can see is over on this data point here, even though we had a bearish MACD cross, you can see we had a wick to the upside at the start of the week. If we come over to this next data point over here, you can see once again, we had a wick to the upside following the MACD cross. And, once again, it's potentially very, very likely that we do have, after the MACD cross, we have one quick wick to the upside, liquidate the bears, and then come back down to the downside and liquidate the bulls. This would be the path of most pain, and as I say in my videos, Bitcoin normally likes to follow the path of the most pain, wrecking the most amount of bulls and bears in every single market scenario. Now, this isn't the only reason why I potentially think that on Monday or, coming into next week, we could get a bounce earlier on in the week. Like we said at the start of the video, we've got a lot of economic data coming in, and also the debt ceiling arrangement has been concluded. So I do think on Tuesday, it's very likely the equity markets rally and Bitcoin follows that. For those of you who don't follow me over on Twitter, I made a Twitter thread recently talking about how Bitcoin still follows the stock market. We ran some correlation tests over on Bloomberg Terminal, and especially for the higher time frame moves, we found that Bitcoin follows the S&P 500 at a 61.49% correlation coefficient. Now, lower time frames day to day, it doesn't track as well, but nonetheless, for the macro ebbs and flows, Bitcoin does 100% follow what's happening in the equity markets, and especially with the debt ceiling arrangement that is going to be wrapped up next week, I think it's very, very likely that we have a short-term pump before coming back down to the downside. What is one final reason, the third final reason which could credit this theory? Well, let's come over to the monthly time frame. We've just had a major rejection from this huge resistance box, and as you can see, we're about to put in a monthly candle body close beneath this 28,000 level, which is about to flip as resistance. So what is to stop us coming into next week? Bear in mind, we have a new monthly candle on Thursday. What's to stop us on Thursday pumping back up to 28,000, retesting it as resistance before breaking back down to the downside? For these reasons, I do find it likely that potentially next week we might see a short-term rally before breaking back down to the downside and getting further continuation. Oh yeah, there's one final reason. Daily stochastic RSI is still turning up, so it's likely for the next few days as well we have a little bit more room to push up. However, like I said, higher time frames, weekly stochastic RSI is still melting and is probably going to be melting to the downside for the next few weeks. So while we may see a short-term bounce, I don't think this is going to change anything like the weekly Heikenaushis, which probably are going to continue bleeding out for a few weeks to come. So yeah, in the higher time frames, my price targets are unchanged. We're still watching this diamond top formation develop for Bitcoin with a price target down at 24,500. And we've got a plethora of price targets like CME gaps around about 25,000, head and shoulders down at 23,400, a massive CME gap down at 20,300, and a bar pattern price target down at 19,500. I also wanted to provide a quick update on chain. Now, in terms of the Bitcoin funding rates, bear in mind this is a slightly weak signal, but I did just want to point out we are seeing in the past week a spike in the funding rates. Now, typically, what normally happens is when the funding rates spike in one direction, the price normally goes in the opposite direction. For example, over here, you can see a very, very clear case where the funding rates went extremely negative. Bears were paying extremely high fees for shorts. And because of this, we had a pump back up to the upside, even if it was a short bounce. Over here, you can see funding rates turned positive. We broke back down to the downside, even if it was a short breakdown. Over here, you can see funding rates turn extremely positive. We had a short break back down to the downside. Funding rates turned positive here. We had a correction for about a week or so before moving to the upsides. Quite recently, we saw a spike in funding rates on the 24th of May, and the price did break from 27,200 down to 26,300. And right now we're seeing, like I said, it's a little bit of a weak signal, but we are seeing an increase, especially in the past week. We are seeing an increase right now in the funding rates. Now, like I said, this is a bearish signal, but it is a really weak signal. To top this off, we also do have a weak bullish signal. Right now, if we're looking at the Bitcoin balances on exchanges, they are starting to flow out, which is typically a bullish signal. But, this is a really, really weak outflow right now. So, you pair these two together and on-chain is pretty neutral. To top this off even further, if we come over to the addresses with more than 1,000 Bitcoin, looking at what the Bitcoin whales are doing, they're not buying or selling. Since all the way back here in December, for the past 6 months, they have been completely stagnant at the same levels, not really buying, not really selling. So while in my opinion, the technical analysis for Bitcoin is leaning more bearish, the on-chain is very neutral. I do just want to quickly highlight once again, if you have been watching my channel, if you have been watching my videos, I've been talking about this chart, which I believe is the most important for Bitcoin. On this chart, we're looking at the major resistance that we're stuck underneath at 28,000, but we're still sitting above the 200-week moving average. We're still sitting above the EMA ribbons. We're still sitting above the bull market support bands. So right now, we're sandwiched between 28,000 resistance and support going down to as low as 25,600. So at least according to my analysis, until we make a clear and decisive breakout or breakdown, then, we're really just waiting for that major decision to happen in the macro right now. Now, remember on the channel as well, we've been talking about how Bitcoin has this huge bearish divergence, which is playing out, and we've really started to come to the downside since 31,000. We have a divergence of sorts playing out in the S&P 500 on multiple different sectors. So let's now dive into the stock market analysis. I shared this thread today over on my Twitter regarding a bearish divergence happening between the S&P 500 and its market breadth. If you're a veteran of the channel, you may remember we covered this Bloomberg chart about 2 weeks ago over on my channel in the video, The Bear Market is Not Over. Now, in that video, we highlighted how the market breadth was currently at 49.7%. If you don't know what the market breadth is, it basically shows us the percentage number of S&P 500 stocks above their 200-day moving average. In our video on this 2 weeks ago, there was only 49.7% of market participants above the 200-week moving average, and since I've refreshed this has dropped all the way down to 41.12%, representing a 17.26% decrease in the market. So how is the S&P 500 holding up so well when only 41.12% of participants are above the 200-day moving average? Well, I found an interesting chart that was posted by the Kobeissi letter. I probably slaughtered how you're meant to pronounce that, but nonetheless, this is an account that I follow over on Twitter. I do only follow 7 pages on Twitter, and one of them is just so I can look at pictures of raccoons. So the other 6 that I follow are all very important in terms of economic data. I definitely do recommend giving these guys a follow. They do share some interesting data, but in their research they found that there are 7 stocks accounting for all of the S&P 500's gains this year. That is Meta, Amazon, Microsoft, Apple, Google, Nvidia, and Tesla. The remaining 493 companies, technically 496, because believe it or not, for some reason, the S&P 500 is actually 503 stocks instead of 500, but nonetheless, not really important. The remaining companies are only up 1% year to date, and this is just another sign, like we were talking about with the market breadth, that shows that it's really just a handful of companies right now which are above the 200-day moving average. It's a handful of companies which are rallying and doing really, really well, and the rest of the S&P 500 is heavily underwater. So if we look at this chart on the index return, you can see year to date, the S&P 500 is up 10%. If we're just looking at Meta, Amazon, Apple, Microsoft, Google, Tesla, and Nvidia, they are up 44% this year. So if we get the S&P 500 and just subtract these companies, we're looking at a 1% year-to-date growth in the S&P 500. Once again, this is just another sign, like we've been talking about with the market breadth, that it's a handful of companies which are doing very, very well in the S&P 500 right now, and the rest of them are absolutely drowning underwater. But this isn't where the divergences end. We've got a few more divergences. On the channel, we like to frequently cover the iShares TIP ETF. We've talked about before how this is a leading indicator for the stock market. Over here, you can see the iShares TIP ETF, let's get rid of the S&P 500 quickly, broke down into new bear market lows on the 29th of August. If we look at the S&P 500, the S&P 500 didn't follow until the 26th of September. The iShares TIP ETF was a leading indicator for this. You can also see the iShares TIP ETF tends to top out before the S&P 500, it tends to bottom before the S&P 500, and the S&P 500 really just lags a few weeks behind it. So looking at the iShares TIP ETF right now, this is breaking down and the S&P 500 is continuing its rally. Once again, we just talked about how this is a warning sign and the S&P 500 should soon follow the course of the iShares TIP ETF. We see a similar pattern as well when we're looking at the Nasdaq. This is just even more accentuated. Once again, you can see the iShares TIP ETF bottoms and tops before the Nasdaq. It bottoms at the same time as the Nasdaq over here, but it topped out before the Nasdaq. In most instances, the iShares TIP ETF bottoms before the Nasdaq, like 2 weeks ahead over here, and it tops out ahead of the Nasdaq. Now, right now, the Nasdaq has been diverging from this for almost a full 2 months right now. This is a major, major warning sign. Now, just one final thing I want to talk about with the Nasdaq. You can currently see, if we're looking at the RSI for the Nasdaq, that the Nasdaq has shot over the 70 line on the RSI, meaning that it is very, very overbought right now. Now, this has really only happened a handful of times, and on this chart, I've identified every single time that the Nasdaq has topped out on the RSI above 70. This has previously caused 7% capitulations, 6%, 12%, 24%, 32%, 14%. This one over here was 12.5%. This was 8%. And the last time this happened, the last time the Nasdaq came up to 70 was at the bull run top on the 15th of November in 2021. The Nasdaq went from 73 all the way down to 29, and that was a 38% crash. So once again, just wrapping up the Nasdaq analysis with one quick find. There are many, many warning signs right now while the Nasdaq is diverging from lots of different markets. This is a major, major warning. Now, wrapping up today's S&P 500 analysis, unfortunately, the Elliott wave theory that we've been covering on the channel, the 5-wave symmetrical triangle, this has unfortunately been invalidated. We talked about previously how the Elliott wave theory is going to be completely valid as long as we do not close a weekly candle above this level here, 4,195. And unfortunately, for some strange reason, like I said, on Friday, we had a major, major rally. You know, you might be thinking, well, maybe there was good economic data, maybe there was good news. No, there was terrible news. We had terrible inflation data. There was really no reason for us to rally on Friday, especially while the debt ceiling fears were still very, very high. This is why at the start of the video I said this rally, to me, is very, very suspicious how it rallied before the weekend close. And of course, now we've got the debt ceiling wrapped up over the weekend. To me, that just seems a little bit strange, seems kind of insidery. But nonetheless, regardless of what I think, the Elliott wave theory has unfortunately been invalidated. So it looks like on this count we were wrong. However, you know, this can still be a throwover. It just means that the Elliott wave theory in of itself won't be in play. Now, you can still see this potentially being something like an asymmetrical triangle with a throwover. These happen a lot of the time in the S&P 500. And right now we are sitting at a major resistance at 4,200. If we backtrace this level, you can see this is a very, very significant level. And veterans of my channel who watch all of my videos know that I've been talking about the $4,200 call wall in the options market. Now, this call wall is still extremely sticky despite the options expirations. We're still seeing that majority of volume centralized around 4,200, and it's not really pushing up too much higher. So this is definitely a warning sign. Once again, something can materially change in this. If we do start to flip to the upside of 4,200 and have a breakout, that's a completely different story. And at which point, if something like that does happen, then we'll have to reanalyze the markets and potentially look to flip bullish in the short term. But while the S&P 500 is still underneath this major resistance at 4,200, then in my opinion, I still think this call wall at 4,200, this major resistance at 4,200 is going to be significantly hard for the S&P 500 to break over. So there we go, my friends. Those are my thoughts on Bitcoin, the S&P 500, and the huge week that we have ahead of ourselves. I want to wrap up the video on a quick announcement. I've finally got my first partner. Now, I've turned down many different partnerships before. Many different cryptocurrency companies have approached me, different exchanges have asked me to partner with them, and I've turned them down, mainly because I don't want to associate my name with a brand that I don't want to believe in. But I think you're all going to like this. You're all going to 100% know what this brand is. I'm going to announce it soon. We're planning a giveaway, so I will be giving away a certain product. I will explain what that is in a later video. So yeah, stay tuned on that front. I think you're all going to like it. Make sure to turn notifications on for YouTube. I will put a YouTube video out when the time is right regarding the giveaway that I will be doing on the channel, and you'll all have a fair chance to enter that giveaway and potentially get one of these products. So for today, my friends, that's all I've got. As always, if you do enjoy my content, let me know down below by leaving a like and a comment. Share the videos with your friends. If you want to further support the channel, feel free to click the join button and become a member today. Follow me over on Twitter at 618_cowboy for all of the economic data that's coming out in the next week. It's been your boy Cowboy Trades. I'm out. Peace.